What are the key metrics that lenders look at when purchasing an inn or a B&B type of property utilizing SBA financing? So let's break this down. Whenever you're buying an existing business, SBA lenders underwrite off of the tax returns of the selling business. So you need to get the past 3 years and a year-to-date profit and loss statement. And if you can gather the balance sheet as well, that'd be very useful. You start there. Is there enough cash flow to support the new SBA loan from a debt service coverage standpoint? That's step one. Now, step two is the borrower. Do they have good credit? Do they have outside income that supports outside expenses? Do they have any experience in hospitality? Do they run short-term rentals, like single-family short-term rentals? Have they worked in hospitality? These are the kind of the initial metrics we look at to see if the deal's going to happen. Do you have the 10% needed? If you're buying $1 million inn or B&B, do you have $100,000, a 10% equity injection? If not, it's okay because you can get creative and the seller can carry a little bit of that equity in the deal. It's called seller carryback on standby. So they can carry back as much as 7.5% of the needed 10% equity injection. So on a $1 million deal, you essentially can get in with $25,000. Now they want to know more about the borrower, their experience, what have they done professionally on their resume. It would be ideal if you did have hospitality experience, but can we get these deals done when the borrower does not have any hospitality experience? Yes, we can. SBA doesn't make the loans. They guarantee a portion of the loan depending on the loan amount. Banks, credit unions, and non-bank SBA lenders make these loans. So what I do as a SBA loan broker is I help you navigate the process. Does it make sense to do a 7A or a SBA 504 green, SBA 504 loan, or potentially an SBA 504 green loan? Is there any value add component? Are we doing construction? Has the inn or B&B been mismanaged and the cash flow is not going to support the debt? Well, that doesn't mean we can't get the deal done. If there's real estate involved, we can say, hey, we're going to come in, we're going to remodel, we're going to revamp. This is our business plan, and here's our projections. We can do projection-based deals. We still will require the tax returns if the inn is up and running. Now, if it's a abandoned inn, let's just say it's been something else, or you're converting it to an inn, then you would obviously need to be able to get the proper licensing needed in your particular county, city, state. We would need that prior to being able to close on the SBA loan. Any construction that's going to happen, we're going to need to get all the permits in place prior to closing. Now, the money you put out of pocket, that counts as part of your equity injection. So there's a lot of ways to structure these deals. I see a lot of people in real estate that are venturing into Airbnb, like the single family route, but then they're thinking, well, that's getting too regulated. Let's just buy a property that's in the right place, that we're not going to have these problems because the zoning is correct and we can get the proper licensing and we don't have to deal with regulations on the single family homes. So I'm seeing a lot of that. So to answer your question, you don't necessarily need experience. It definitely helps. You need a solid business plan. It helps if the business is very profitable. It helps if you reside within a 2.5 hour radius of the said business or property. If not, doesn't mean we can't get the deal done, but it does help. So when you're analyzing potential projects and before you write an LOI, you can reach out to our team at bookwithbo.com. That's bookwithbo.com. And you can schedule a consultation with our team and we can learn more about the deal, learn about your borrowing capabilities. We can talk you through the process. So generally, as you're negotiating with the seller, or the selling broker, you're going to want to get the financials first. Obviously, they don't necessarily love giving their tax returns off the bat. You might have to sign an NDA, build a little bit of rapport. But that's the way to do it, because it starts with the tax returns of the business, and then we dive in. Outside income that supports outside debt, good credit scores, got the 10% equity injection, or you negotiate a seller carry, some post-close liquidity, meaning after you put your down payment down, you should have some reserves. If you fit those metrics, then it's a very viable deal. And we have a handful of lenders, actually more than a handful of lenders that we work with. So depending on the deal, We help you navigate the waters to get the deal approved, funded, and closed. So anyways, go to bookwithbo.com if you have any additional questions. If you're looking to acquire a business, stop scrolling on Biz Buy Sell and visit franchiseresellelistings.com. We'll do a customized search. You can get on our weekly distribution where we're sending new inventory weekly to your inbox. So visit franchiseresellelistings.com and opt in today. See you there. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.